Welcome to my daily stock review where I'll be going over Mastercard. The goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor. I'm on the journey at the moment. I've got 2,500 hours in on that journey, and I'm sharing the lessons along the way. How we're going to go through this is go over the stock analysis, and in future videos, we'll go through YouTube comments, questions and answers, and review goals. Here's my investing process. It's 5 steps. Go through where I found and came across this investment, and then a 5-minute check for today. These are the guys that I learned from. They did all right for themselves over the years. So look at those guys, learn from the best, and emulate their success. Let's crack in. So for this process, I'm going to go through and try and find their annual report. So literally go into Google, Mastercard annual report. There should be an investor relations, and we'll just jump into this one, financials and SEC filings. Yeah. All right. So the latest annual report for this season is 2025 annual report, and then it goes through some proxy statements. Sometimes they'll go and have a annual general meeting in the start of the following year, so 2026, and then there'll be a couple extra statements. We may need to have a look at this proxy statement if there's anything that's not really displayed in here. Let's have a look at the annual report. And right here, I'm just trying to look around for the financials. So directors, executive compensation. So in my process, I've got 3 key areas that I want to look for. There it is, financial statements and supplemental data. I want to look for mastery. So has the business actually mastered its customer? We should be able to see that in these financial statements. Has the business got a moat around it? So what is its protection from its other competitors coming in and stealing their customers? And management. So are management actually rational with how they're spending the company's money? And that's really a look at how they, for the previous years, how well have they been able to execute on their strategy? There's you can have a lot of talk and a lot of marketing fluff and pretty pictures at the start and a lot of marketing about the actual business itself. But at the end of the day, as a shareholder of that company, we want to know that the money that's coming through it is actually making it to us. So first of all, income statement or statement of operations in their case. And let's just have a look. So net revenue, we can see 25 over the last 3 years from 2023, 24 and 25, that net income has been increasing. So this is in millions, so that's 25 billion, 28 billion and 32.7 billion. And costs, or expenses of the business, and those operating has gone up as well, but the income that's come through at the end of the day has been increasing as well, which is great. So that's a good first sign. Now, other income, you've got investment income, which is minimal compared to the rest, some gains, losses, and interest expenses, which is, compared to the top, pretty minor. But when I say minor, that's still 722 million. Net income, so the bottom line is effectively been increasing as well, which is great. All right, let's have a look at the balance sheet. So assets of the business, cash and cash equivalents. We've got a fair bit on hand. Total current or total assets, comes to 48 and 58. And liabilities, let's just go totals. Total liabilities, 41 and 46. So it's a lot closer. What about the current liabilities versus current assets? So it's fairly close. So what have we got? Accrued expenses. So that might be something that we want to have a look into. Do we also have... No. All right, accrued expenses and then a long-term debt. The biggest ones in their liabilities. So I'd be wanting to have a look at, really we're worried about short-term, and if the long-term is starting to get way out of control. So for this one though, like I like to have a little bit more comfortable assets versus liabilities. So I'd want to go on, if I was looking at this business further, I'd want to do my homework on what these accrued expenses are, and then liabilities, then the long-term debt as well. And then compare that with competitors and things like that. Is comparing that net income at the bottom, or the bottom line of the business, and then have a look at these cash flows, which we'll go into now. So cash flows of the business, we've got our net income terms, and then all the costs that come out of that, or cash coming in, cash coming out. So we've got amortization, customer incentives, share-based compensation. So yeah, everything's kind of increasing in that direction. Like share-based compensation, yeah, at this stage that doesn't look too crazy. Prepaid expenses. All right, nothing too out of the ordinary in the operating activities section. So now we're looking to investing activities, which is nothing crazy for this business. Like these figures aren't weighing a lot onto the business. If there was any standouts, I'd be looking for those to see what they are and what impact they have. Financing activities, so purchases of treasury stock. So looks like Mastercard's been purchasing or spending some of its money into repurchasing its own stock, which is a way that increases the value for the long-term shareholders. So what that does is it takes those stocks off the table to the outside world, and that just means that it increases the size of each share. So how much value of the business does each share get? Say for instance we go from 100 shares, on the extreme and they get it down to 50 shares, then that it's effectively doubled this ownership of your stock that you might own. On this case, they've got a lot of stocks and outstanding, and it's a slow process and it takes time, but it's one that does provide value. Now, if I was looking into this business further, it would be having a look at how much this business, or when this business has been purchasing them, and if management are purchasing their own stock when it's below value, that's a value add operation. If they're purchasing stock when the stock price is already way overinflated, that's not going to increase the value to long-term shareholders. It's effectively just wasting it. So it's about being rational and prudent with their spending. All right. So cash at the end of the day on hand. This is a really healthy business, very similar to Visa in terms of repurchasing stock. They've got a really healthy, or fairly healthy balance sheet, and income statement and cash flow statement as well. Management team, I'd be wanting to go in and, well, we may as well now. Let's have a quick sticky beak at management's details. So we want to look at, say, for instance, long-term alignment. And so security ownership, this is the one where we want to have a look at in a bit more detail. So this is also part of doing your homework on the stock, the next level of my process, which is, cool, go and have a look at these things in detail. So let's do one of those in particular. All right, wonderful. So like I said at the start, some of these items will be kept off and out of the report until the annual general meeting, and they'll add it into the proxy statement. So let's go and find that. And what we're looking for, executive compensation. And what some important things are that we're looking for in here is there'll be a lot of talk and fluff in here as well. But I want to see that the alignment long term for the management team is aligned with long-term shareholders. What does that mean, Jack? Well, hopefully I'll be able to show it. Summary. How do they scrub it? Let's just go ownership. Stock ownership information. Yep. Let's just crack in here. Cool. So if you wanted to see who the largest shareholders were, got Vanguard, BlackRock, Mastercard Foundation. What we also want to see is, what do we got here? Security ownership of directors and management. So this is an important one. What it tells me is the important people within the business that have a lot of sway in the direction of the business long term, do they have skin in the game? And what do they do with it? And is it considerable compared to their actual wealth? So say for instance, if any of these guys were a billionaire and they'd come in as the CEO and they had $1 million invested in the business that they're running, that would be a very big disparity between having $1 billion and only investing and putting $1 million of their skin in the game. So I wouldn't be very confident that they really cared about what the result of that would be. That's on the extreme case, but it's something that we want to have a look at here. So you can see there's a fair few here, but annoyingly it doesn't come up with, yep, cool, here's who the CEOs are, here's their current roles and positions. So now I will go and have a look for who's who in the zoo. Information about our executive officers. Cool. I just want to president, vice, chief marketing, chief product, CTO, CFO. Chief executive officer. So since January 2021, so he's had the last 5 years. So that's a pretty good runway to be able to tell on these, definitely in these financials, that these guys have had the main impact over the business over that time. If they just started, they can't really be paying for those results. All right, so Michael, let's just look for him in this instance. Michael Maybach. Where is Michael Maybach? There we go. So shares of Class A, directly and indirectly owned, 53,000. He does have the most. Shares Class A, common stock obtainable, and then common stock beneficially owned. Yeah, well, I don't look at beneficially owned. Let's just look at what he's currently got in the game. So 53,000 shares, that is. Does it say number 2? Fractional shares have been rounded up to the nearest whole share. Okay, cool story. All right, so he's got some significant skin in the game. All we do there is 53,000 times whatever the current stock price is. We can also see that on the line, if we wanted to have a look at the incentives, which are usually spelt out in here as well, in the proxy statement, do those goals actually align long term with the business? So, for instance, comparing pumping up the stock price in the short term to meet, say, yearly marketing figures and things like that, or where they've marketed what they think their shares are going to be hovering around or reaching during that time, say, to other shareholders, and comparing that to over the next 3 to 5 years, we're going to vest this many stocks and we want to see net income or cash flow increases of whatever that is, XYZ. So overall, what do I think? Mastercard is a quite healthy business. It does have, effectively, it's already had a lot of growth and it's quite mature in its business at the moment. Similar with Visa. Visa and Mastercard are actually in effectively a duopoly. They've been able to transition over to card infrastructure and then be able to dominate across that, I guess, the infrastructure that they have. They've both got really good moats around that. Whether that will be the case over the long term is different. Inevitably, different technologies, innovations come along. Do I think that Visa and Mastercard may be able to soak up some of that innovation? Yes. But do I think that this stock is one of the best stocks at the moment, and that over the next, say, 20, 30, 50 years, will be able to 100x? I don't think so. It's a mature company. It would fit into the case of if this business, either financially, we had another GFC or another market crash, and then looking if there's an opportunity to buy the stock at a reasonable price or a discount to it as well. All right. If you like these breakdowns, I'll be doing these reviews daily. You can subscribe and get the latest. If you've got any questions, or if you'd like me to do a comparison between Visa and Mastercard, just drop it in the comments. I'll go through and review those in future videos when we've got some comments. And if you liked this, then check out this next video. Cheers.